Hey everyone! So, if you're looking for a way to really give your investment returns a boost, one of the most powerful things you can do is start looking beyond our own home market. Today, we're going to dive into why diversifying internationally isn't just some fancy buzzword. It's actually a crucial strategy for growth, especially with everything that's going on right now. Let's jump right in. So, let me kick things off with a question that might hit a little close to home. Have you taken a look at your portfolio lately and just felt like it's treading water? Like it's not really making any big moves? It's a super common feeling, and honestly, there's a very good reason a lot of Indian investors are feeling that exact same way. Okay, to really get why your portfolio might feel like it's stuck in neutral, we've got to start by looking at what's been happening right here in India. So, what have the markets been telling us lately? Well, the reality is the vibe in our domestic market has been kind of mixed. The Nifty 50 has been what we call range-bound. Basically, it's not soaring up, it's not crashing down, it's just kind of stuck bouncing around in a narrow band. And that lack of a strong upward push is exactly why so many portfolios feel stagnant. But there's another piece to this puzzle, one that often gets overlooked. Right, let's talk about this hidden force that has a massive impact on your investments, whether you realize it or not. I'm talking about the Indian rupee. This is such a critical factor, and it can either be working against you, or, as we'll see, it can work for you. Just take a look at this. It shows you the trend over the last 5 years or so. Back in December 2020, you could get about 73 rupees for $1. Now, if we follow that same path, by December 2025, that $1 could be worth around 91 rupees. That is not a small shift, folks. It's a really steady, significant trend. In fact, that translates to a depreciation of roughly 24%. Now think about it. If all your money is invested here in India, a weakening rupee like this can just quietly chip away at the real value of your returns. But what if? What if you could flip that whole dynamic on its head and turn it into a major advantage? And this right here just nails it. For your global investments, that very same currency movement becomes what one source called a silent but powerful tailwind. It's a perfect analogy. Think of a tailwind pushing an airplane, helping it fly faster and farther with less effort. That's exactly what a weakening rupee does for your investments held in US dollars. So if our domestic market has been kind of treading water, what's been happening in the rest of the world? Let's put them side by side, India versus the world, to really see the whole picture. And wow, this is where the difference becomes crystal clear. The story in global markets has been way, way brighter. I mean, look at the S&P 500, which is a great benchmark for the US market. It delivered a stunning 26% return in 2023, another 25% in 2024, and even so far this year, it's already up around 17.5%. Meanwhile, the Nifty 50, well, it's underperformed by a lot and has been pretty much range-bound lately. Let's just zoom in on one of those years to really see the difference. This chart for 2023 just makes that performance gap impossible to ignore. That huge difference in returns, that's the opportunity that so many investors missed out on by keeping all their money at home. So, how does this actually work? Why did those global funds do so well? It's not just about picking the right stocks. It's actually about a really powerful two-part formula that we can call the double advantage formula. Let's break it down. Okay, so here are the two engines that are powering the growth of these global funds. First up, you've got the equity rally. This part is pretty straightforward. You benefit from the growth of the international stocks themselves, just like that 26% rally we saw in the S&P 500. But then, and this is the cool part, you have the second engine, the strong dollar. So when you convert your dollar-based returns back into rupees, you get an extra kick because the dollar itself has gotten stronger. It's a total win-win. All right, so we've talked about the challenge of a flat domestic market, and we've uncovered this powerful double advantage of investing globally. So the big question now is, what do you do with this information? How do you apply it to your own strategy? What's the next step? The key takeaway here is actually pretty simple, but it's so important. Don't put all your eggs in one basket. If you rely only on the Indian market, you risk missing out on these huge growth stories that are happening all over the world. The great news is getting a piece of that action is easier than ever before through things like global ETFs and mutual funds. They let you capture growth from all corners of the globe. And that really brings us to our final thought. When you look at the data and when you understand this double advantage formula, it's pretty clear that global markets offer a really compelling opportunity. So the final question I'll leave you with is this. Is your portfolio truly diversified and ready to capture growth, no matter where in the world it happens? Thanks so much for joining me.